All right, guys, let's take a quick look at gold, which I posted on my Twitter feed this morning, and also a video breakdown for my VIP Discord students. All right, so there's nothing really overly complicated about how this works, right? What I've seen this morning, obviously, is we've got a lot of chop here, and we kind of had this big impulsive move to the downside, followed by a reversal, or what you'd normally say is like a V shape rejection of this area before price then failed to break above 23.20. All right. So when I'm looking at that, there's a couple of things that I'm looking at. No, number one, I don't really want to trade back into this chop, right? I know, although it's kind of been cleared out here, I don't want to trade back into this because anything can happen in here. We broke above these highs. Okay, obviously, if you'd had your level above here, there's actually a trade here, one-to-one trade here that you would have been able to take during Asian session, all right? But what you'll notice then is that you've got a lot of wick rejections on this level, right? And you've then got 637 Frankfurt Open and then London Open down here, where price is failing to close above 23.20, right? So the first thing I wanted to see was I actually had a long bias this morning, right? But I trade price action market structure. So if you look at the way price has changed direction today, the first thing you notice is you've got this rejection here and an engulfing 30-minute candle to the downside, right? The following candle comes up, forms the wick, breaks the low and breaks back in to this accumulation area, but it also breaks below the low of this 30-minute high, right? The next candle struggles a bit, okay, because I think there's probably a lot of traders trying to trade a reversal here and trade the early break. So if this candle had closed a little higher and then broken back above and closed above this level, I would have taken a long position potentially to try and see if we can break the 23.20 level and maybe 23.21, and maybe it will push a little bit higher. But what you'll notice is that each and every single candle high, so if you follow the wicks on the 30-minute time frame, you've got the wick and then a lower high, a lower high, a lower high, a lower high, and then you've got this volume come in probably this 1 hour candle. So from 8 o'clock to 9 o'clock, there's a lot of volume come in here when London opens, and they're pushing price down very quickly. So you want to be able to capitalize on that move. And the way that I do it basically is, once we've got this low and we've got a closure below this level here, right? We've got a 30-minute closure below. The first thing we do is let's just pull this over a little bit. We wait for the wick to form to the upside, right? Because if the wick forms to the low side and then moves up, there's a higher chance that it's more of a liquidity grab, and there's potential for price to reverse from here and move back up, right? But if the wick forms to the upside first and then breaks the low of the previous candle, then there's a very high chance that price is going to move straight through with high volume and pretty much straight to your take profit. So once we've got the closure here, all right, stop loss would be above the high of the previous 30-minute candle, and the entry point would be a stop order on a break of the low to get a good price, because as price moves past this wick, sometimes it can move so quick you can't actually pull the trigger on your trade quick enough. So what I normally do is I set a stop order here for the break of the low, but I'm paying attention to the wick first. The wick is this is one of the most vital parts of trading this strategy, is the wick to the upside or in the opposite direction to what you want to take the trade. That has to form first, right? So the wick forms first, and as it comes down, it follows through, and in 30 minutes this trade's hit full take profit of 1-to-1. So 1-to-1, obviously, because the market's quite choppy at the minute. Once the trade is moved into maybe 10 or 15 pips of profit, the first thing I do is I'll move my stop loss down, okay, and limit my risk, because if this low is broken and then this high sort of re-breaks its own high, then there's a chance that we're gonna flip. So I've now reduced my stop loss from 40 pips down to 14.4, or roughly about 15 pips, I think it was. And as we move even further into profit, maybe halfway to my take profit, the trade is set to break even. All right, so just to recap on that, okay, we've got the momentum in the market starts here, 637 into Frankfurt and then London. London actually pushes price down and we get a closure below this level. All right, we wait for the wick to form to the upside and we place a stop order just below this level here. All right, as price moves through, we reduce a stop loss by pulling it to the current 30-minute candle high. All right, because once that high is formed, it shouldn't then get re-broken, and the volume kicks in and sellers take over, or fully take over, should we say, and price moves straight to take profit very quickly, in and out, done and dusted before 9 o'clock. And yeah, we got some very nice profits. So that's how I trade gold. It's as simple as that. This is what I actually post out, and this is what I teach my students in the in my Discord channel. Okay, you can take a look at the links anywhere here on this post, and if you want to join, feel free to send me a message on Twitter or Instagram, and I can set up a onboarding call if you like, if you want to go through a few of the finer details. If not, then if you look through my YouTube channel, you'll actually see I've got a playlist based on Forex. It's called Forex Simplified, and there's a lot of tutorials on how to trade this specific entry method on my YouTube channel that you can watch for free. So make sure that you give them a like, comment, ask me any questions, and make sure you save them to your watch list, because there's some real good educational videos and real good content in there that you can learn a lot from. So yeah, good luck, guys. Happy trading, and see you in the next video.